to a couple pennies. Here we go, SMFMMTs. Weight Watchers. When we started featuring Weight Watchers 3 weeks ago when I was in California, it was on the overbought list. And yes, it did come down. If you take a look at the low down here at 68 and 79, that's $11 haircut, and it's come right back starting this new week, coming right back up to these tops. As far as the $80 call goes, when we had the daily correction in the name, you can see where they took the premium. They gapped them down from $2 down to a nickel, buying them at a nickel. And the ones that are in the overbought list, that are quality in the overbought list, are going to be the ones that bounce up in bull rally trends. Overbought, they pull back, then they rally higher. That's what bull cycles do, because they do. They get overbought. They finally make their bottom. Some of these listed stocks are wonderful. That's the call option. That's the $80 call. When they come down overbought and they've come all the way down, it's time for MMTs to engage and looking and looking below the market, the ones that I've taught, and look for these call contracts. They took all the premium out of them, and here is the daily chart. When we called for overbought, we said we were going to come down, and we did. Here's the chart. Here's the earnings gap on Weight Watchers back when we were doing it. This is all on a daily chart. Here was the daily overbought process. That was 96%. We had 1, 2, 3, 4, 5 good days of pullback, bouncing right off the 50-day moving, weekly moving average, daily moving average, I mean, right here, getting back above these. We're going to keep continuing to watch it. It's not as overbought as it was. On the weekly, once again, when we were calling it over here, it was 96.2. It came down to 91 here during the overbought correction, and then has popped right back up, threatening to make all-time highs at 93.67% on a weekly.